Taking your time out and joining us here on ET Now. And first up, I wanted to take your views on Sri Hare Krishna Sponge Iron. I was going through the financials of the company and they've degrown over the last few years. Return on equity has deteriorated, return on capital employed has also fallen over the last few years, and PAT has also declined. You tell us, what is your view on this company?
Well, I totally agree with you. No, this IPO is for the revival only, because at the end of the day, you see the way their profit is falling, and see they are in the margin of sponge iron. Okay, now this is a very cyclical business. Even their margin is almost 0.8%, which is very thin margin, and that's why they need lot of debt. Even their working capital is going negative. It's having a small capacity of 30,000 metric ton, but the problem is, they are actually catering to one region only. Okay, that is Chhattisgarh, and that is where this completely company is in risk. First, again, there are a lot many legal cases going on against the promoter, and governance issue is there. So these are the some of the points which you have to keep in mind. But the most important point is thin margin. Now, 0.8%, 1% is nothing. Any bad quarter will completely wipe off their profitability, and they can go to negative. Plus, the globally when this war type situation is there, no, the commodity prices will go and up down. So looking at the risk and everything, I think this is IPO should be avoid from my side.
Avoid rating coming in from Sri Hare Krishna Sponge IPO. But apart from that, let's also put the spotlight on Abram Food. Snehi was just talking about the sustainability of profitability going forward. Company reported a jump of about 220% in profit just before the IPO. Is the profitability sustainable, and what is your view on this company?
Well, really, that is something which will catch eyeballs. How can we 220% jump? But yes, that is also one of the main concern. Plus, see, this company is also, of course, in consumer staple, and their margin is around 5%. Okay, now you know that any type of agriculture, raw material, if that goes up and down, it will directly hit their margin. Plus, they cater to only Rajasthan and Delhi NCR region. Plus, what is there? No, these promoters, no, they are not having any non-competition agreement. Means anyone can get apart and they can start this the same type of business. Again, the financials are okay, not so great. Plus, as I told you, the last result, whatever is there, no, is not so convincing that 220% profit. Plus, small region, and it's that is having a no moat actually. If you see now, anyone can enter to this business. So looking at this, even Abraham Food is a avoid from my side.
This counter is also an avoid rating Abram Food, but let's also talk about Icon Facilitators. Now for this company, the concentration risk when it comes to clients is very high. About 87% of the revenue is generated by top 10 clients. How do you view this aspect of the company? And the same question with respect to profitability also. But just before the IPO, the company has gone ahead and boosted its profitability. How do you view this company?
Well, that is a completely red flag because if they're boosting their profitability, plus as you told, they are majorly focused on 10 clients. Any one or two clients you will go, they have an impact on their direct profitability. Plus 95% of their revenue coming from Delhi, Haryana, UP and all that. And again, this is a labor intensive business. So there are almost 2,000 employees. And now you know what type of labor issues are there, their skill. Again, there is the attrition rate, which will impact their profitability. Again, it's a business where a lot of manpower needed. Plus, the governance issue is also there. If you see the independent director, they lack management capabilities. They again here also there is no non-competition agreement is not there. That is also a problem. Plus, debt is rising. From 2.4 to almost 4.4 crore. So, valuation looking at this, this is the business which will not ask for a more premium. And I think at this level also, I think this is a little bit on a higher side. So that is why from valuation point of view also I'll say avoid to icon facilitators.
So avoid rating for Icon Facilitators. Valuations remain a concern. Tapan, thank you so much for taking your time out.